Hello, by way of introduction, my name is Alicia Harrington, Senior Director of our Chief Innovation Office here at ServiceNow. I service customers across APJ region. Prior to ServiceNow, I was working at PwC, KPMG, Accenture, consulting to very large multinational corporations, primarily in financial services. And really, I was focused on engagements across customer experience strategy, operational excellence, IT, technical, and, broadly digital transformation. So at ServiceNow, my charter is to work with our customers and help them digitally transform in the areas of operations, risk, and IT, and really help them innovate on the ServiceNow platform. So today I'm going to cover some of, the shifts that we're seeing across global shifts, customer shifts, technology and data shifts that we're seeing in financial services. Why financial institutions really struggle with customer operations, what are the impacts of sometimes being disconnected, and finally, how ServiceNow can help you scale your customer operations to deliver a better customer and employees experience. And we'll touch on some of the customer stories and proof points at the end as well. Just before we get started, safe harbor notice for forward-looking statements does apply. So banks are under an unprecedented amount of pressure that really requires a transformation of the middle and back office. So let's look at some of the macro effects that are really impacting global financial services. So moving from left to right, there's this increase of digitization across the board. Fintechs are really defining what good service looks like across various value chains of any banking system. And, fintech disruptors are, they're not coming, they're already here to stay. We're seeing it in a multitude of subsectors within FS. It should come at no surprise that, 73% of millennials would trust a technology company or a brand that they trust when it comes to even financial services. And why? Because consumers are no longer comparing banks to other banks. Banks are really being compared to any service from any industry and any technology company and brands that they trust, as I said. So that's this new benchmark that banks are having to reorientate themselves around. Secondly, this strength for operational resilience and this focus point, really, it should come at no surprise given COVID-19, the UK and EU banking regulations on operational resilience across the board applying to every jurisdiction in the world. But really, this is not just the ability for the bank to monitor and measure some of these risks. It's looking at absorption of shock and looking at future forward-looking planning, scenario analysis, stress testing, being able to look at, business continuity through a new lens, really embed risk and control and compliance, and get rid of some of that, manual, laborious, high cost of compliance in the organization. So really, there's a need for operational efficiency, risk reduction in a lot of the key, banking processes, and finally expanding capacity. So, I'm sure you've all, been quite familiar with various systems of record, standard operating procedures, lots of legacy infrastructure, and no real, source of truth. This is really stemming into longer time cycles at the banks. So there's very long and sometimes unpredictable onboarding times. Managing KYC, managing customer identification is sometimes challenging as well, not just at the onboarding part, but across the board in terms of the whole life cycle of the customer and some of that repeat enhanced due diligence processes that usually happen. And really this is because of this fragmentation that's happening across the banks, lack of visibility and transparency internally. There's rigid, documentation requirements, and sometimes there's unclear interpretation of compliance requirements, both from the regulator as well as inside the institution. The world of banking is changing. We've just spoken about a lot of this, but really the point of this slide is in order for banks to stay competitive, these businesses really need to transform their key value chains. Customers really expect a seamless digital experience, and they expect a multitude of experiences. So this concept of the multi-experience and really looking after the needs of the everything customer that expects you to be more than just a bank. as well as looking at this global shift in being able to leverage and control data. So there's, unstructured data, structured data, contextual information around the bank that, if brought together in the right way, can be used for better decision-making, meaningful interactions with the customer, and then also branching out into new products and services, given the insights that you can gather from that data. But it's challenging at the moment, given it's so disparate across a multitude of systems at the moment. So we're seeing quite a few trends happening as the world of banking is changing. And, we just spoke about the world expecting more from a bank and how it's changing fast. So let's look at a view inside the enterprise and take a closer look at what financial institutions face today. And due to current market conditions affecting, say, servicing loans, let's take lending as this example. I'll start to build out the slide. We're seeing, historic number of mortgages and refinance loans due to lower interest rates around the world. Mortgage volumes have increased between 30 to 40% in 2020 last year. This is primarily looking at sort of US data, but still applied, globally. It's a difficult economy. Total number of loans in forbearance grew, to 2.66% in 2020. 2.7 million mortgages, they miss their payments, whether it's, student loans, and we're seeing some of that on the small business and lending front across the board in terms of some of the uncertainty and volatility when it comes to businesses with COVID-19 impacts. Customer engagements, service center hold times have increased, across the board. Abandonment rates have grown 25% as well. And the cost to service. So, the cost to service alone is really up by a significant percentage for non-performing loans, and just across the board, really, the cost to serve is a lot higher than before the GFC, and we're continuing to see that across the board as well. These conditions really highlight the need for servicing improvements in the middle and back office. So whilst we've taken, control of a lot of the customer engagement layer that the customers interact with, but the middle and back office functions are still needing a lot of support. And so what do we mean by this? As I'm saying, the engagement layer, the middle and back office has these unstructured processes, and the back office has, antiquated silos. There's this lack of visibility, which is creating fragmentation. And really, this is such a big challenge. You have, credit assessors, specialist areas within the banks, agribusiness bankers, a lot of different multitude of personas sitting across the banks that they need to find the right information at the right time, and they can't be looking across all of these different sources to just make decisions and do their job. So what's the opportunity? There's a bold future for banks to continuously innovate. And what we see across the board is, a recent study found that about 40% of time is spent in global operations, or what we call that messy middle that we're talking about right now, performing tasks with this high administrative burden. And, systems need to be, to better direct requests, and the work as well needs to be better navigated through all of those teams. So we're seeing, with a 20% redesign of customer banking journeys, this can look to a 20% uplift in CSAT, customer service scores. As such, better customer service translate to customers being 2.5 times more likely to do business with their existing bank. And no one does business with just one bank anymore. So you want to ensure that, they want to do more with your bank. So this is also about not only retaining the customers, but getting them to, through their moments that matter in their life changes, be looking at a multitude of financial products. And with process automation and AI, this can have a significant cost reduction in the front to back office operations, really. We talked to, hundreds of bank executives across the globe. Really, they're focused on this problem at large. And what they want to do is they're revolving themselves around these 6 priorities, really. So cost, control, compliance, continuous improvement, colleagues. So that's the banker experience. Just touching on this point around the banker experience, I've seen across the board up to 12 months of time to competency for any sort of banker or new joiner into the bank, where they've got to get up to speed with all of this information, and it's quite challenging. So in order for the talent and workforce to be effective, we need to make things simpler for them across the board. So, and finally, the customer. Everything starts and ends with the customer. So we want to bring what was the front, middle, and back office into one central team working harmoniously together. And this is really the only way to improve customer employee experience at the end of the day. So being able to consolidate, have these middle and back office functions, collaborate, speak intelligently, have visibility over each other's work is really, really where it's at. And embedding risk and compliance, some of the challenge we have seen is really when it comes to risk and controls in the businesses, there's no single list of regulatory requirements, no single list of risks, no single list of controls, no single mapping of controls to those risks, no single mapping of controls to control points, and no single mapping of control indicators to controls. So in such a highly regulated market, risk controls and compliance need to be embedded within the business as opposed to being seen as a separate function. And they need to be automatically detected within the system that agents, middle and back office, front office are operating in as well. So they don't need to be reminded manually, and this is where things usually fall through the cracks. And, this comes from, where we're seeing the shift from what's traditional financial services when it comes to risk and reg to the future of financial services. So it all comes down to what I'm calling, compliant by design. So policies need to be enforced, say, within, an API developed by risk and service teams. We need this systemized, governance over policy. And we need to remove a lot of this fragmentation and manual management when it comes to monitoring risk and compliance. So this thing of, continuous controls, monitoring is really what can play a big role here. And ultimately, we want to prevent some of those pitfalls from happening, as I mentioned. So especially, in areas like responsible lending, which occurrences of mis-selling products due to failure to perform, adequate due diligence. I've seen this happen across the board. This is really where a better understanding of the customer needs and objectives is really important. Having those checklists and control points for the people dealing with the customer and the people assessing the customer's applications is really, really important, so that you have this unified and consistent approach. And, across the board, we're seeing that this is really about implementing policy associated with, job descriptions and having that readily available for them in a systemized, digitized way, all in one central location. Automating quality assurance and compliance process, so the concept of the 4I check or various layers in the banks where there's quality assurance checks on every decision and process. We can automate a lot of that. We can have, managers approve a lot easier and faster. We need to enable this greater speed across the quality assurance, audit, compliance processes and business operations. And just to kind of expand on this and bring it to life a little bit more, when we talk about continuously controls in real time, as opposed to say, looking back at, batch feed data periodically, sometimes these controls can fail or trigger something else. So we want to have more detective controls in place that can send continuous alerts throughout, say, a lending life cycle, as you can see sort of generally on this slide. So we want to have, through all of these different risk categories, all of the information and checklists for, every single stage of the value chain at large. We need to be having process level risk assessments, what risks are associated with the process for, say, offering a new credit card versus, performing object level assessments within, say, a workflow. And we need to demonstrate separate inherent risks to application and controls and look at how we can manage residual risk as well at large. So ServiceNow doesn't just help customers manage operational risks, by helping them reduce automating and manual independent processes within digital workflows, but we also help to embed controls into the digital workflows. We help you continuously monitor risk associated with those workflows and automatically generate alerts when these risks elevate or when the controls actually fail. And we do this by a common services data model, which is a framework supporting all of this in how our products sort of work together across our integrated risk management product and our financial services operations product, which I'll go into in just a moment. But what we do is we really underpin all of this, which is integrated into what we call the CSDM on our platform, tied to business processes, financial account types, financial products, all of the data that exists in a bank. And we really help to use what's called the BIAN framework, which is the Banking Industry Architecture Network, which is all underpinned by this as well. So we can help manage integrated risk management, whether it's managing regulatory change, whether it's assessing those inherent risks or looking to continuously monitor. We have a detective mechanism and preventative approach when it comes to managing risk at the bank. So let's more broadly look at the path forward. We're here to talk about operations. So again, with connected operations, you're really able to transform the customer experience, surface insights and take action, whether it's contextual information within a case, say that the interest rate is dropping and we know that typically customers refinance their loans. Well, how about we have those agents and bankers proactively reach out to the customer? Use cases like that, automating compliance requirements we just spoke about, and really innovating, enabling new business models, new business services. As we're seeing this multitude of fintechs, we're seeing, a lot of blockchain companies, intermediaries that are coming in. We're seeing tech companies with new financial services. So really this evolution of banking, we need a solid platform to help with innovating at large. With ServiceNow Single Data Model that we touched on, we're able to bring a, say, management level business unit owner and help them achieve front to back collaboration and visibility, whether it's across IT, having all your operations, which can be mapped to their underlying IT assets to minimize risks. Employees are equipped with a single place to do their job. Customer experience, so all the stakeholders have a complete view of service delivery processes, action requires, and we use what's called process optimization, which we're able to really map out, instead of having very long, projects that help analyze process mapping and re-engineer to a future state. We're able to just simply, with point and click and drag and drop, visually display, at a helicopter view, what is the process? Does it need to be redesigned for whatever reason? So this continuous improvement approach as well for customer experience. Operations, efficiency is really achieved through automation, reducing time to serve, enabling, SLAs to be met, and, hitting all those KPIs and customer service metrics. And finally, risk and controls, compliance, we need these to be monitored, audited, and reported, and we need to be able to proactively approach various risk indicators. So with our industry-specific solution for financial services, and I'm going to double click into some of these that you see here, but just to give you a wider, more broader view of what we're offering in the market, is that we have our financial services applications for card operations, payment operations, and loan operations. But it's not just exclusive to that. We're really enabling every area of any bank, whether it's retail, institutional banking, wealth, or any line of business, because we are a workflow engine at large. We handle very, very complex service delivery in the business. And all of this is underpinned by various data models and capability through, customer and operations workflow, whether that's workflows and integrations, case management, omni-channel engagement, agent workspace, having a place for everyone to do their job, and feeding in system of record information. And we enhance all of this through machine learning and artificial intelligence, predictive analytics, and we have developer tools, low code, no code applications, and we're able to ensure that employees and customers can work and get what they need done, whether it's through mobile interface, conversational style, or through working from home. So we're very a flexible platform, being able to effectively scale operations at a bank. So let's take a look at card operations. Card operations can be the connective tissue between front and middle and back office operations. So again, we talked about the high administrative burden for card operations, whether it's servicing, new credit card applications, or whether it's changing credit limits, declining credit card lost and stolen. Really, we're able to manage all these service requests that come in from the customer. And we're able to, through standardized workflows, we're able to basically get all of that servicing done as fast as possible. Payment operations. So we know payment errors are, in fact, a big problem for any bank. For example, the top 15 US banks spend approximately $3 billion each year combined on disputes processing alone. And there's various issues such as incorrect debit requests, payment and errors. Various things go wrong when it comes to payments. So with payment operations, what we're able to do is deliver out-of-the-box workflows to give customers a visibility into, their claim status for various payment refunds, and provide clear visibility on tasks so that you can meet internal SLAs, prioritize work, follow standard procedures, demonstrate compliance, and avoid negative operational impacts that can result in, say, a regulatory fine. We help with remediation of customer financial claims. And with payment operations at large, we're able to support the digitized workflow for payment inquiries, payment investigations, so that a head of payment operations and all the people underneath them get a clear oversight of their teams and the impact, and they can really improve processes over time. And lending. So there's a significant opportunity to improve efficiency in loan servicing. Just to give you a few statistics here, loan servicing costs have increased over the last 10 years 4 times at least. Loan servicing is burdened by manual tasks, disparate systems, which we talked about. And really, we need to integrate these disconnected systems when it comes to lending. When it comes to lending, it's not just being able to assess the financial situation of a customer and get their application through to settlement as quick as possible, but it's also, whether it's amending those loans or any sort of service requests that come in terms of customer requests for lending. And it's about doing it as efficiently as possible. So I'm just going to give you an example here, in our region, across Asia Pacific, a very large bank, they had 43 different processes. And through automation, the bank was, really looking for a way to mitigate a $50 million annual exposure tied to regulatory fines. They used loan operations, again, a purpose-built solution for financial services operations that supports personal and business lending. And leveraging the ServiceNow platform, the bank was able to achieve nearly 1 million minutes of productivity saved. And additional benefits recognized include customer and employee satisfaction, uplift, and various sustainability benefits across the world, as well as cost savings. So just highlighting a few points there. So this impact is huge, right? So again, reducing the cost of service, from 25 minutes to say 5 minutes in certain tasks. Reducing the number of spreadsheets from 8 to 0, and looking at the time to complete requests, from 4 days going back and forth with emails to, less than a day, or just, 1 email, for example. So this is huge impact across the board that we're looking when it comes to operational excellence and efficiency. And this is really what the loan life cycle should look like at a, helicopter view. It's about keeping it personal, being able to personalize through contextual information. Customers want to know that there's a personalized approach to the needs that they have. Clients now want to understand what the opportunities are for them, what products that they have. And they need to understand some of their key service requirements for, say, lending, whether it is, if they've had a government COVID-19 loan or deferred of payments due to, tough times. They need to be proactively notified, and so that they can manage a lot of their finances as well. They want to be updated, so, proactive notifications. And they don't want to be tied up on the phone either. They want to be effectively, they want to be serviced. They want to self-service as well, and they want to be empowered. So they don't want to be sitting on the phone for hours, speaking to a banker. If they can do it themselves, or if they're able to do things a lot faster, and not have to repeat themselves, this is exactly what they're hoping to get done. So again, financial services operations is a purpose-built solution for financial services operations. And effectively, what we're able to do is provide visibility on tasks, help meet internal SLAs, prioritize work across lending. And, these are out-of-the-box workflows that support business loans, whether it's term loans, whatever type of loan. And we connect all of these disconnected lending services together, as long as the systems and tools, to provide a better experience for the customer and employee. So these are out of the box, supporting everything I just mentioned, connected silo systems spanning across, whether it's the lending origination, whether it's deal systems, credit assessment, the credit engine. Will integrate all of that into one area so that the agent has a single pane of glass across their activities. And with performance analytics, we're able to get data-driven insights so that you can make decisions faster and better, and look at current patterns and trends. Harness the employee productivity by focusing on tasks that really drive growth, and not focusing on tasks that aren't very value add. And accelerating operations with purpose-built metrics and dashboards. So performance analytics for financial services operations, we want to anticipate trends. We can monitor existing conditions and prior performance to adjust service coverage, such as market conditions, interest rate indicators that may influence a customer wanting to refinance their loan. We can be proactive in reaching out to them ahead of time, as we mentioned earlier. This is all part of performance analytics from ServiceNow. We can prioritize resources. We can quickly detect service bottlenecks that occur and identify areas for improvement. We can deliver automation and self-service, easily identify areas where automation and self-service can increase efficiency and reduce costs. We can drive toward continual service improvement. We can pinpoint areas of performance improvement and take action using key indicators, mobile-enabled scorecards, time charts, analytic drill downs, and dashboards. And we can create connected states between tools and the run the bank, protect the bank dashboards, all provided for all levels of the bank, all the way up to the board. And we can align customer service with, overall business objectives as well. We can help, pin all of the company strategy with deep data insight into customer success operations, so we can balance customer satisfaction with operating costs. And portfolio management, we can look at deals that are linked to customer and products, and with that knowledge, we can power up advanced analytics and delivery of personalized experiences to customers. We do use a lot of a high level of intelligence in the platform already, machine learning to deliver real-time policy changes as an example. We can look at provided context, apologies, my phone going off. And we can, based on predictive modeling and personalization, we can do things like loan risk prediction in banking. And all of this is really to use predictive service, use techniques like similarity and clustering to enable teams to solve cases a lot faster, and natural language processing, so enabling customers to self-service more efficiently. And we do this to help make that shift to a more proactive, predictive bank. So how are our customers scaling their operations? I wanted to give you a few proof points of other customers around the globe. So today, over 1,000 plus financial institutions are leveraging the ServiceNow platform to deliver digital transformation in their own businesses. Many customers start with ServiceNow's bread and butter, IT service management. This represents an exciting opportunity for ServiceNow as we continue to scale out, well beyond 60-70% are beyond IT, meaning that we're helping deliver business operations, lending, cards, payments, and various line of business servicing for, banks and their customers across the board. Our customers in FS are everything from big, large retail and commercial institutional banks to wealth management, investment banking, capital markets, trading companies, payment companies, and fintechs as well. We have a number of financial technologies who are driving customer service operations with ServiceNow. A quick case study, one of our customers with 30 million customers in total, they are the largest UK retail bank, but more importantly, process over 40% of all payments in the UK, making them a critical part of the UK economy and payments infrastructure. They needed to transform their operations across the enterprise to improve their overall resilience to disruption, improve their customer experience, embrace the growing ecosystem of fintech partners, and reduce their operation costs while removing legacy technology debt. So they needed to overhaul and replace their technology data model for the group, effectively starting again with technology management, removing all of the bad practice, controls overhead, and legacy that they've created over the years. They first focused on technology resilience, successfully implementing the IT service management, IT operations, connecting and automating tasks across their cloud infrastructure. And the bank had really proven out successful adoption model yet again through using payment operations on ServiceNow in only 12 weeks. And considering the criticality of this service, then volumes of teams involved in extensive integration requirements, this is an astonishing achievement. So complex processes, there used to be complex processes for payment operations for this particular bank. And the problem was absolutely accelerated when COVID hit, causing an offshore team of 200 payments agents to become instantly unavailable to process cases, which resulted in an immediate offshoring resource program to increase capacity. Lloyd's really needed to, bring forward a payment operation transformation. So at the end of the day, to sum up this, entire talk track that I've spoken to you today, I want to highlight a couple of points. What we need to do in the market is out-evolve. So I've mentioned a couple of the metrics. You need to differentiate your bank from the rest of the banks, and really implementing with seamless workflows will help you achieve this. So when we're talking about middle and back office operations, things like 18,000 hours saved, we mentioned the 200 FTE, we mentioned reducing engineering onboarding, and a lot of improvement across the globe in terms of banks using robotic process automation as well, and being able to out-disrupt. You will be leading the charge and disrupting the market. And you can do this with ServiceNow, and you can achieve things like, 80% increase in automation of payments and error workflows in 12 weeks. Again, UK bank. Implementing in 6 weeks, Bridgewater Bank was able to get their small business loans up and running in light of COVID-19, and 1 million minutes saved across brand contact centers and channels on their first process deployed in 16 weeks. That was Kiwi Bank. So some of these achievements in the market is absolutely where we're heading when it comes to outperforming the market and ensuring banks are competitive and out-engage. With Swiss Re, 66% of 7,000 annual service inquiries were resolved through self-service. So these are outstanding, points of reference that you can see on the screen here. And I just wanted to end it with effectively our platform of platforms. So we make the world of work better for people. And this is our platform of platforms where we pull in all of the systems of records, as I mentioned, onto the Now platform. So whether it's through, omni-channel, however the customer and employees need to interact, they can interact on the ServiceNow platform, all in one platform, one single cloud platform, one platform for a data model and architecture, all underpinned by various experiences. So with that, I will end with leading the revolution. So it's not just about banking change, but true financial services revolution for you, for your customers, and for your future. So we want to see transformations in weeks, not months or years. We want to see returns in, thousands of %, not increments, and the ability to drive blistering speed and total control at the same time. And with that, thank you, and I hope you enjoy the rest of the conference.